The revenue that we're collecting, or the Treasury's collecting, the last time we heard from the Treasury anyway, was about $1.5 billion a day in revenues from tariffs. Rose to as high as $2 billion. It's well up from quarter or so of a billion a day during the early 2020s. Import price data hasn't been published for September yet, but through August, import prices were continuing to increase, which means that the exporters to the United States are not adjusting their prices down to compensate the importers who are paying the tariffs at the point of receipt. So the entirety of the tariff burden is falling on some combination of the importers themselves, the companies, their profit margins, and then to whatever extent it's being passed on to consumers in the form of higher prices. You can see that there's increasing number of economists who are trying to track this phenomenon. So you had goods prices, both from imported goods and domestically produced goods, falling. The trend coming into the early part of this year was falling prices, and we've seen that inflect most notably on just after Liberation Day and then at certain kind of discrete points thereafter. So if you're looking at imported goods, they're about 6.5% higher than the trend prior to January would have indicated. And tariffs don't just raise the price of imported goods, they also raise the price of domestically produced goods that compete with those imported goods, and those are up about 4.5%, again, over and above where the trend was indicating.